Hey guys, this is Chase here with Everbullish. I am the stock Sherpa here to lead you to the top of the mountain when it comes to all of your investments, making it easy, making it fun, and making you rich. So this is a post that I put out today. This post is about how we grew to 51% year to date, whereas the regular market and S&P 500 and all your friends and average investors, or worse, God forbid, are sitting at 25% or less on the year. Here's how we did it, and here's how we're different. So basically, this is the blog, the vlog, and the live trading resource. And I'm sending this out through that. So go subscribe at everbullish.substack.com and get the premium subscription so you get all the actual trades. But here we are. So just an idea that a lot of people aren't understand of is that while other portfolio managers and zero mutual funds have the ability to outperform their own index, or rarely do, is because simply they can't buy certain type of investments, right? So they can't own Bitcoin as it is because it's a cryptocurrency and their prospectus doesn't allow you to do that. There are ways if you have $2 million or more to have somebody do this for you. I charge $20 a month. So basically we tethered this portfolio to Bitcoin, recognized that it was a standard and a superior investment. In buying encouraged over 31 points of outperformance this year. I told you when to do it, and that was on February 15th. That's when this portfolio started. And I like to wait out what happens at the beginning of the year due to the Santa Claus information that we get, like volume, institutional ownership, and the path of kind of where the market's going to decide to go from next year. Professional fund managers have to stick to the prospectus. They also have to diversify stocks by their size, their sector, and their goal. Basically, the government requires through FINRA, which is the former SEC and NASD. It's basically the police for financial advisors, portfolio managers, and the industry. They require them to have certain exposure to certain things like international, emerging poor countries. And they really herd kind of buying everything that the other guy owns and the other fund owns and the other manager owns, basically to just kind of make sure that no one's overly risky. But what they're not realizing is that you don't have to do that. As an individual investor, you don't have to do that. So they add waste and fill up the whole grocery cart like this. And it's like if I came to you and said, make me the best steak dinner with the best vegetables. I don't care about, Eggo waffles and mushrooms and orange juice and eggs. I just want this incredible steak dinner. And this is what we're doing instead. We're going and picking out the best vegetables for the recipe, so to speak. The way that you can see this is CrowdStrike. When CrowdStrike hit the fan back on July 20th, it was trading at 120. I put this alert out and said, guys, just sell CrowdStrike. I gave you the full rationale, and I gave you guys the portfolio of why, so you can go into your portfolio, and out of the 17 to 22 stocks that we owned at that time, CrowdStrike was actually the second largest holding because it had done so great. We ended up keeping over 21% worth of profit from buying that to selling that, and we missed the entire debacle on the downside. Your portfolio manager can't do that. They are required to keep certain amounts of what they used to own. You'll only know what you own when you're looking back on a 90-day in arrears, because that's how funds are required to report. Just get rid of it. Just buy the 17 to 22 great stocks that I recommended at the beginning of the year. And of course, we said this at the beginning. You can go check the tape on YouTube, but we built it forward looking. It was very obvious in my sector performance strategy that industrials and oil weren't going to do great this year, right? Because of commodity risk and currency risk and geopolitical risk. And simply, it was also a very hot topic as far as politics, right? Where are they going to move factories? Where are we going to do all this? We said, let's just not even think about that or not worry about that, because we're going to invest in what is going to be good. And it was tech, small caps big time, right? Lowering interest rate. Small businesses can borrow at a cheaper rate to go and make their product better and market it to you better. Whereas large companies are kind of tied up and they don't even have to use interest rates to do that. So they've spent what they've spent. Materials did very well because a lot of them are tied to commodities, and commodities do well when the US dollar is shrinking like it was at the beginning of the year. And of course, we did zero oil stocks. Go find me a single active or passive mutual fund, 401k vehicle, or professional manager that just says, we're going to go X oil. And this is something I've been doing, and how I got 13 out of 15 years of over 10% performance of the market. That sounds bold, but you can even check it on YouTube. That's how transparent and how good I am. So buy it, set it and forget it. 15 minutes, no skills needed. If you even need, you can call me and I'll walk you through it on a Zoom call. You can also call your broker and say, hey, I'm buying this portfolio. I want 10% this stock, 12% this stock, and they make it for you. So that's how this all works. Everbullish has performed the best and is actually a really fun way, a really easy way, and a proof that all these molested statistics all over the internet and in school and everywhere you go says that no one can beat the typical index fund. And I've said it for over 20 years. That's all bullshit. And since I started recording it, I've done it 13 times. All you have to do is follow. I call myself the Sherpa because I provide all the utilities, all the climbing equipment, all of the routes, and I hire other people as well. And I have friends that do the business. And I'm the Sherpa that sets it all up to get you to the top of the mountain safely and quickly before the weather changes. So, and I don't always get the credit for it. I don't want the credit. I want you to have the credit. Just follow me. I've laid the path. On a $200,000 investment vehicle or investment principal to start, if you invested in the broad market, you'd have made 25%, which is just happens to be 250,000. So this year, just by choosing to look out for your future and try to live a fun, active lifestyle and just setting your investments in the average of what people are getting outside, just think of your typical Edward Jones, your typical Fidelity, or every 401k, and over 50% of professional portfolio managers, you'd be sitting at 250 right now. Look, 50 grand in returns is not something that's going to happen often. It's certainly not something I promise, but it's something I have been doing. So the better strategy to go is to buy 17 to 22 stocks, the ones that I recommend in the portfolios that I send out on my website. All you have to do is click it. It's $200. You get the holding of the current portfolio, which is in 10 stocks right now. One of those is actually cash, so we can buy more later. We're going to sell out of that before the end of this year. We're going to wait 15 days. We're going to buy back in January on the 15th or the 20th, and we'll already know what happened as far as the Santa Claus rally in the beginning of the year, whether it came or not. And I will then send you the already built portfolio so that you can do this again next year. But if you had the same 200 grand and you put it in the Everbullish portfolio, you'd be up to $302. So we're providing $53,000 worth of outperformance, actually, because I rounded these. And all you had to do is follow my fun videos. Make sure you're putting your future first. It's good to make friends. It's better to make friends money is kind of my motto, and it always has been. So make your wallet fat and your future self grateful. This is all very easy. Everything's here. The portfolio that I'm highlighting is my flagship Everbullish One All Stock portfolio. This is for anybody that's under 50 or somebody that's, let's say, 50 or even in retirement that wants, let's say, half or a quarter of their assets being a satellite high performer out there. And we do this all with less risk than the market. So go to Everbullish. Let it be easy. I'm the Sherpa. My name's Chasemcpheeters. I put my personal and my business email here. And I also give lessons. I can also come speak to you. I can really do whatever you could ever want. As far as somebody that's essentially on retainer for that $20 a month or $200 a year for Substack, that's the trading resource and how you get really, really good at this. Or if you just want me to control the whole thing, you can also hire me and I can manage your portfolios. I do charge a pretty high percentage of that because we make you so much money. All right, guys, I really love y'all. I really appreciate y'all. Remember to AFG, LFG, LGR, let's get rich.